Welcome to you, Johnson. Now, looking at results out of Pan Africa Insurance, the company declared a dividend of 2 shillings today. Much to the delight of investors, the company's dividend now sits at dividend yields now sits at 10%, which is pretty high. Is this really usual for insurers in Kenya?
Well, you know, for Pan Africa, what you're seeing now in the last couple of results, say the last one and this one, is there have been a little bit more stability in earnings. It was a lot more variable in previous announcements, where it could move from profit to loss positions pretty dramatically, and I think the market expected to see some of that variability coming through, especially because of the high interest rates, and that hasn't come through. We are seeing it's been taken as a very pleasant surprise. If you tracked the trading prior to this, it had gone up to a low of 18 Kenya shillings. So we take it as a huge positive.
Looking at the results, yes, there was that dividend, and you did allude to some pressures coming through for the company. We had a profit through to December falling back 25% to 443.4 million shillings. What were the main drivers behind this fall?
Well, primarily they took a huge charge on bond holdings and some of the assets that they needed to revise downwards simply because of higher interest rates. And because of that, then that's one of the biggest reasons why you saw a retarding in profitability. But take into cognizance the fact that the underwriting position grew, strengthened. So we just, again, like I said, we take it as strongly as a positive.
You know, looking at these results, you couldn't get an indication of how the Kenyan consumer is feeling at the moment. We have the life business of the company not doing pretty well. We saw gross written premiums dropping to 6.35 billion shillings from 8.36 billion shillings. What did you make of that number? Well,
because of, say, Kenya, the culture in Kenya, where purchase of life insurance has not really picked up. We expected that to fall back, but we could argue that it exceeded expectations simply because even the underwriting profit was still it was still strong. So again, it's something we expected, but we expected a much larger drop than that. So we take it as a positive.
Now, expectations for the company going forward in light of generating new business. We know that some expect that inflation will drop, leading to a drop in interest rates as well. What are your expectations for the company and the industry as a whole going forward?
Whilst we can argue that inflation will drop, and simply because of expectations, where currently inflation rates are too high, the necessary policy prescriptions that ought to drive that, in my opinion, have not been put forward yet. So I'm not that positive in terms of inflation. However, going forward, I think they have a good team there that knows how to do their math. So I expect them to sustain their underwriting profitability. But what I'm bullish about that company is the investment income that should come through. And last year they undertook a project in real estate. We got them a good return. And this year we're expecting them to do a similar project. So again, we expect maybe flatness or slight growth in the premiums incomes, but we're expecting the push to come through from investment income.
Now, looking at another company that is expected out with results tomorrow is Housing Finance. What are your expectations for that company tomorrow?
Well, we expect some good growth coming through from interest income. We expect perhaps NPLs to surge a little, but that should be tempered with a drop in in their interest expenses, simply because traditionally housing finance has been a company that has raising its money through expensive fixed deposits, but now they've been allowed to do current accounts. So they're expecting their cost of financing, funding should come down. So that perhaps is where we expect the growth to come from. Of course, also the new innovative products should push their top line a bit, but mostly we expect it to come through from a drop in cost of funding.
And now looking at the overall market, banks have been dominating the market, with Equity Bank, Barclays Bank, Cooperative Bank really continuing to dominate the market in today's trading session. Now, this ahead of the results that are expected out in the next few weeks. What will happen then to the market going forward after all these results have been released?
One reason why banks dominate a lot, and precisely the ones that you mentioned, is because of the liquidity of their stocks. But also the expectations of results play a part, and we're told that from central bank that the defaults that were probably expected as a result of high interest rates didn't come through. So I guess we have had to revise upwards the expectations of performances of banks, and Barclays, being probably one of the least aggressive, still recorded a growth in its organic business. Never mind that the exceptional item. The other banks then we expect should be able to push that through, especially because if they took the same strategy as Barclays, where they are concentrating more on current accounts to raise low-cost funding to drive their business.
Johnson, thank you so much. We have run out of time. That was Johnson Nderi. He's a research analyst at Suntra Investment Management.